Amazing, thank you. That was a great discussion there. A little bit of humor mixed in with a lot of context. So now we're going to jump into our next topic today, and it's taking a look at how the market is formulating, some of the dynamics that we can notice, and also some of the trends moving forward. Volatility has been a big buzzword, also generally in the markets, where we see the price impact going and the market atmosphere. So if you guys can join me in welcoming our next round of speakers, we have Evan Greenberg, Boris Richard, Juan Park, and John Farjo. Thank you, guys. Have you got everyone? It looks like you might be missing a few people.
We might be missing half the panel at the moment, but you know.
Why don't you guys take a seat, introduce each other, and jump in, and I'll go and have a little hunt for the other two.
John and I can get started for sure.
Create some space for you.
So, John, you now have your own fireside chat. How do you feel?
I feel really special. And
there we go.
I haven't felt this special all day.
Yeah, why don't you talk about yourself and how you got to founding LunarCrush and what you guys have been up to?
It's a long story. I'll give you the short one. Started investing in crypto back in 2013. Started attending some of these conferences. Thank you so much. Ape Water. Beautiful. Started attending some conferences, got really into crypto, started finding projects through social media, got some friends together and said, hey, can we start to collect some of this stuff? The answer was yes. We realized we were starting to use the tool for ourselves, and we started realizing, you know what, we have a company here, we have a product here, and the rest is history, and here we are today. That's the 2-second version.
All right, well, we'll dig in a little bit more in a bit, but Manu, why don't you talk about yourself as well?
Sorry I'm late. Number one, I'm the most punctual person in the world, so this is like very unfortunate. But I'm Manu. I'm not up here. It was a last-minute addition, but I'm the CEO and co-founder of a company called Alpha.io. And basically what we do is we use blockchain to solve real problems. And what are these problems? There are 3 main problems that blockchain is kind of like ideal for: authenticity, resale, and community building. We're working on use cases across the board, from sports loyalty, where we're getting ready to launch a platform for the Milwaukee Bucks, to Ape Water, which I just brought a couple of cans on stage, where we're using blockchain to track sustainability and recycling. And so you'll soon be able to collect banana NFTs every time you drink a can, and a banana peel every time you return them, and actually track your impact. To luxury brands that are moving their process of authentication. So everybody here that's bought an expensive item knows that it comes with a paper certificate of authenticity. What we're doing is we're actually connecting straight to brand POSs, and we're minting NFTs that contain the serial number of the item, the color of the item, the resale royalty that the brand wants to add to it. And with that, the brand can then go engage its community and build out loyalty program. So not a fad.
Great to hear. And Boris has now joined us, so why don't you just give a quick intro, and then we'll dig into the markets.
Sure. I'm very happy to be here. So I represent JS Held, based in Washington, D.C. We're a global consulting company. We have about 1,500 people globally. So we've been actively moving into the crypto space, and we bring a few kind of dimensions of expertise to crypto natives. Number one, we do work on certain regulatory issues. We can help exchanges, custodians with compliance issues that they may face with the regulators. I'm a former trader. I'm also very interested in market dynamics and the microstructure of the cryptocurrency markets. So we've been involved in helping decentralized exchanges and centralized exchanges to address issues of market manipulation and ensure that the traders are abiding by their exchange established trading rules. So we're also involved in blockchain investigations, especially when they become complex because they require tracing the token flow across chains, right? Because you can, obviously people rely on Chainalysis, Elliptic TRM Labs, Merkle Science, and other providers, but oftentimes the flows of tokens through cross-chain bridges are pretty, pretty convoluted. So you have, and this is where we come in. We can definitely help with those types of investigations. And I would say we have also been starting doing some work in NFTs and the Web3 space, and this is why I'm here. So we, because we have economists, we are doing market surveys, and we help alternative investment managers to launch their NFT platforms, and when they need to understand how to price their services, how the competitive landscape looks like in the NFT marketplace space, we definitely help with economic analysis and provide recommendations on kind of reasonable pricing of their services. On the negative stuff, we do work with lawyers, and if anybody gets in trouble with the SEC, CFTC, FinCEN, and others, we get involved in those types of responses to the regulators as well. Thanks.
Great, yeah, so let's dig into the macro a little bit more. We'll start with Boris. What are you seeing now? What's the most interesting thing you're seeing in markets right now?
Oh, I would say, let me sort of divide this question into negatives, positives, and challenges, right? So negatives, we have seen from the Luna Terra crash that there is just too much leverage in the DeFi space, and there is, surprisingly or unsurprisingly for others, there is quite a bit of interconnectedness, right? So the Luna Terra crashed. That led to the crash of the stake ETH, and that created troubles for Celsius. A few other centralized crypto lenders, Voyager Digital, Three Arrows Capital, and final bankruptcy. So there is quite a bit of leverage, excess leverage in the system at this point, especially from a DeFi perspective. On the negatives, I would also say, the hacks and losses of funds continue. I think through the first half of this year, we had about $2 billion of hacks and losses. That's about double the size in 2021. But I'd say that's on the negative side. So on the positive side, I think there is much more, to be honest. So institutional adoption, continues to march on. I mean, you look at the news. And you see that BlackRock is partnering with Coinbase Prime, right? You see Apollo Global Management, going to be custodying the funds with Anchorage Digital. So Fidelity, allows the institutional clients to start trading ETH. So there is definitely a continued merge between the CeFi, TradFi. So that's on the positive side. On the positive side, there is definitely a push towards greater compliance in the entire system. So there was a recent report by Crypto Compare. It's a UK-based data provider. So they say that about 2/3 of the centralized exchanges right now are considered to be strictly abiding by the KYC and AML rules. So definitely, there are positive trends over there. Elon Musk buying Twitter. Again, that's a clear sign that somebody wants to build payment system, probably based on Bitcoin Lightning Network. So I'm hoping that will create much more use cases to the cryptos. So on challenges, again, I think many of the challenges are related to DeFi because DeFi has to find its place. And there are issues of scalability and security. There are issues of market integrity in the DeFi space. I'm sure these challenges will be overcome, but I think overall, the institutional, the VC interest in the space continues to show that there's tremendous upside in the sector.
And do you think there's any chance, the cryptocurrency markets have been pretty coupled with the stock markets, with the Fed actions? Do you see a path for those decoupling where crypto could do something outside of that bigger macro picture?
I think yes. So I mean, if you look at the May-June sell-off, and the delta of Bitcoin versus S&P 500 was 2.7. Right, so that's similar to what happened in spring 2021, but on the quantitative side there is some decoupling. I mean, we see the S&P 500 volatility going higher, but the Bitcoin and ETH are trading in not all-time lows, but very low in terms of the volatility. And if you look at some of the options-related metrics, some people will call for the bottom in the crypto prices. I think what solves the issue of decoupling is more use cases, right? Because right now, many tokens don't have fundamental drivers of value other than alleged or presumed network effects that still have to materialize. And I think the industry is actively working towards those economic consumptive uses that will put, cryptos, and they will anchor their value and decouple them from other macro and other traditional securities markets.
Great. And so John, he's talking a lot more about the markets themselves, but you guys are looking more at sort of the social media markets. And what are you really seeing that the sentiment is, and what are people saying?
Well, I think first to start out, you have to realize that to create the hardest money that the earth has ever seen and to drive global adoption doesn't happen in 10 years, right? This is a play that will outlive everyone's life in this room. And so you have to remember that when you see volatility, it's because it's early. And you can look at that as an opportunity because I'll relate this to the question you asked, which is, when we see the social activity that we see, I mean, we were up here earlier this morning showing you that, social activity is at an all-time high. And, 6 months ago, you might have thought, oh, well, we have it all figured out. Here's the layer ones, here's Bitcoin, there's Bitcoin, there's altcoins, there's DeFi. And we're still in a market where something like an Aptos can launch and have more social activity than Ethereum. And so, again, it's early. And so I think the truly helpful thing to look at the community activity is it really helps you zoom out a little bit. Stop staring at prices. It makes you overtrade. It makes you pay your taxes way more than you ever should be. And you're probably not earning more Bitcoin along the way either, are you? And so you have to zoom out, you have to have a long play, and you have to realize just how big this place is that we're playing in right now. This is not a trade because look, if you make money, what are you gonna do? Are you gonna cash out and move to fiat again? You're not, you're gonna stay in the system. To do what? To stay in the system and trade again and use things. And over time, these applications will have a lot of users and a lot of utility to the point that you all of a sudden don't care about price because the utility matters more to you, the community matters more to you than cashing out. And I think that's a mistake that a lot of people that I talk to make is they think that they're gonna get a moonshot and sell it and be a millionaire and have a nice boat or something, whatever. And it's like, you're not gonna do that. Once you get into this space, you literally don't get out. It's the wrong mentality, it's too short term. But again, on the social side, we see record growth, and one of the more exciting things about that is we're also seeing that in stocks. So traditional markets are now driven by the community. Your first giant taste of that was Wall Street bets. And it's interesting, when we started tracking stocks, we started realizing that there's actually an equivalent amount on Reddit. There's a lot going on Reddit versus crypto is much more Twitter native. And it's like, it's a different kind of a narrative, especially when you have markets that close, and they're closed on the weekends, and they're closed on bank holidays, and they're closed in your evenings while crypto keeps trading, but the community is always on. And so I think there's really some interesting things happening with community around all assets. And that's really gonna be interesting as we see social media evolve, which, wow, who knows what's happening next, right? We're one headline away from another shocking thing. So it's really an interesting time that we're in.
And during a bull market, there's a lot of pump, moon, Doge. Has the conversation evolved more? Are you seeing more substance in these communities?
Yeah, and I think the right way to look at these different things, I mean, you could look at the market and say, I don't know, there's 20-something thousand, I don't know the number anymore, of cryptocurrencies out there. No one knows the exact number. And so consider them microeconomies. Don't consider them ranking by market cap. That's the wrong metric. That's a fiat-based metric. That doesn't make any sense. Within them, there is utility, there's community, there's loyalty, there's development communities, there's things being built, and what's here tomorrow is not what was here today, and what's here a month, it just all evolves, and the communities keep growing. And so what we're seeing is like, we track influencers on our site as well, and like, those influencers tend to stay around. They tend to support specific communities and stay there. They're not talking about pumping and dumping their community that they're loyal to. And so I think it's a different perspective, and we're starting to see more of that. And a lot of that is wrapped around especially NFTs, where it's not quite as liquid as buying and selling your cryptocurrency, your coins. It's much more about like, you know, we see like innovation in the way that the drops work and how social is used around that and how it builds into something else. I mean, I think, you know, it's also interesting when you think of, you mentioned Doge, you know, Doge was a joke, right? Some people still don't take it seriously, and it might be in use by the largest social media platform you know, while you were sleeping, you know? And so it's a really, I'd say if anything, what we're seeing is much more loyalty around specific microeconomies.
Yeah, so you mentioned Aptos, you mentioned NFTs. Are there any other maybe communities that you're seeing have sort of an outsized social media chatter compared to sort of the general knowledge of them?
Yeah, and what's also interesting about that is when you layer in market activity on top of social media, we saw that Ethereum had a far better year than Bitcoin did over the last 12 months. When you look at social and market activity combined, the Ethereum community grew like crazy last year, more than Bitcoin's. And so, you know, there's people that debate all the time. We're not here to debate. We don't have opinions. We have data. And we see that the data shows that Ethereum had a stronger community and market activity than Bitcoin. But there's outsized things that you see. Sometimes not all positive too. Solana has a lot of really, really loyal people in it. But there's a lot of outages over the last year, right? And so there's a lot of scrutiny. That drove social from more of a negative side. But we still see the Solana community growing like crazy. So, you know, things change over time. Maybe Solana never goes down again. I don't know. But we'll see.
Yeah, and Boris, some of your conversations with bigger institutions, are they talking mainly about Bitcoin, or are they talking about a number of different assets?
I think, you know, they talk about, you know, different assets, obviously, but here in the United States, their choices are restricted by the regulatory environment that we're in right now, right? So the only thing that we know is a commodity, not security, is Bitcoin. So, I mean, Gensler recently made, you know, hints that, you know, Ethereum, because of the merge too, might be now considered to be a security. So that definitely would scare off the markets. So fundamentally, they're definitely looking at other assets. And if you look at the reference rates that, let's say, CME is now publishing, right? It's no longer just Bitcoin and ETH, because they're trading as, you know, futures and futures options. I mean, they list Cardano, they list Atom, they list Link, they list Lumen from Stellar, they list Uniswap. I think, you know, the institutions are preparing for the kind of oncoming interest that will cover, you know, assets other than Bitcoin. So it's just the current regulatory environment sort of restricts the U.S. actors to a particular asset. I mean, you look at Canada. I mean, they have physical Bitcoin futures. We don't. Look at Germany. Look at Portugal. Look at Europe. They have so many more assets to trade. Why? Because they have different regulatory framework.
And I do want to circle back to regulation in a bit, but let's touch on NFTs, I think, before we do that. Before I turn over to Manu to talk a little bit about real utility with NFTs, I do want to just talk about sort of what we saw in the last NFT market. This was really the first NFT cycle. You know, the cryptocurrencies have had a number of cycles at this point, and each time there's been more adoption, there's been more utility brought in. NFTs, we just saw the first cycle happen. So I do want to explain a little about at least what I saw happen there. First of all, these communities like the Bored Apes, the CryptoPunks, these 10,000 or so communities, what I saw there was that people were creating something out of nothing. And one day it may be nothing again, but it's really interesting that in Web3, it's not that you start with a product like you do in Web 2 and then try to create a brand around it. In Web3, you're able to create that brand first and then create the products. I mean, we've got Ape Water, for example, as, you know, a potentially hot product in the future. And that's just something that's been layered on to this community that, you know, people really got behind. And we'll see if they're able to become content companies, fashion companies, metaverse companies, whatever it might be. But that thing that where all these different companies were sort of created, crowdfunded to some extent by people buying these NFTs and creating billion-dollar brands, that's pretty cool in my opinion. Number two is you have the artists. For forever, you could sell physical art, but you really couldn't make a lot of money on digital art. Now artists were able to monetize their digital art, whether they were already digital artists or whether they became digital artists because they saw something there. There's a lot of talk around what's going to happen with royalties in the space, but when artists are able to have a royalty associated with every sale of their art, that is amazing, because forever artists have sold their paintings just to get some money for food, and then if it's sold for $10 million down the road, they were cut out of that deal. Now, with NFTs, with royalties built in, there's an opportunity for them to continue to get paid every time their art is sold. So those are two things in this very early NFT stage that I think are concrete. Then we have to talk about what else is there: loyalty programs, real-world utility, event-based NFTs. And I think Manu can talk a lot more about what she's doing and what else she's sort of seeing in the space in that regard.
Yeah, I think it's so important to kind of like differentiate the NFT as, an asset, like as a Bored Ape per se, and what the tool can do. NFTs are essentially just a digital receipt. You can attach it to anything. And the technology behind that is really powerful for anything that requires you actually understanding the chain of custody of an asset. And what is going to be done with that in the future is going to define our identity, right? The state of California has just announced that, marriage and birth certificates are now going to be allowed to be on the blockchain. The implications of that are ridiculously big. If a baby's born and instead of having a birth certificate, they have an NFT, that is their everything. It's their birth certificate, it's their identity, it's their, and it's their data. That's so important as well. There's like, the differences between, the ethos of what Web 1 was decentralization. Then Web 2 came along and kind of like aggregated information into these power players that now own you, right? Like, if you're not paying for it, you're paying for it with your data. And it's so important that we understand that every interaction that we're having is like being monitored by one of these mega players. Then we go back to Web 3, and these NFTs are ours, and we can choose who we want to share that information with. So going back to the example of the birth certificate, right? So you're born, you get your NFT. You go to school, your transcript is attached to that. It's your transcript. Nobody has access to it, but it's in one place. You buy a car, you can attach the document of your car to that. We're gonna live in a world where we're able to hold all of our stuff in one place, which, how many people have lost their birth certificate? How many people have no idea where their renewal date of their passport, et cetera? So it's just like, just think of efficiency gains. It's so simple. And then the other point is, if I do choose to share my information, it could mean that I could get fast-tracked through my college application because I have nothing to hide, and here it is. It could mean that I get a discount on my health insurance because I'm also able to kind of like show my entire medical data. And so we regain control of our data, and we choose to share it with the people that we support. Those are some of the things that we're working on a smaller scale. Like, for example, for our use case of the Bucks, we have basically a few different interactions that happen in our wallets. And by the way, our wallets are, we like to call them grandma friendly. They're accessible through a one-click magic link on your phone. In my opinion, one of the most important steps in mass adoption is ease of use. You don't even have to call it a wallet. I wanted to call it a locker room because, you don't want people to be scared from the term NFT or from, the term crypto for me has fully reached its limit. I think it's time to let go of crypto into Web3, out of crypto. Crypto is still strongly associated to cryptocurrencies. And the technology itself is so powerful on the back end that, as you said, we can price in fiat currency or we could use the cryptocurrency. And I personally look at, projects to invest in as projects that have real utility. Why did Polygon do so well in the past couple of months? Polygon beat every single stock in the market, if you were to compare it, because it's really easy to use. It's cheap to mint. The rules of the smart contract are easy to engage. We're using Polygon for a number of applications, but then, we also use Wax for physical stuff, because the metadata in that smart contract is way more intense. We can have a lot more there. And so back to the Bucks platform. there's a few different things you can do. One, we're connecting straight to their existing Web 2 program, and we're minting stamps, and we're hiding little perks in them. So every time you mint a stamp, you could get a free drink or a free beer or a koozie or something like that. And then on the collectibles front, athletes and artists suffer from a very similar problem, to your point. 80% of athletes go bankrupt 18 months after their career is over. So by building in resale royalties into physical collectibles that are benefiting not just the teams but the athletes, we're solving a massive gap. We're building long-term value. And then number 3, which is my favorite use case, is geofencing experiences that are specific to a location, right? So for our stadiums, what we can do is we can put a giant QR code on the Jumbotron. You can scan that QR code in-game, and you can grab your commemorative, which is a baseball card of that game with the main results, everything that happened. Then on the back end of all of that, we built out a loyalty schema that obviously you have to opt in. Once again, the data is yours. You choose to participate in it if you feel like there's real utility. But if you do choose, and you become, for example, a super fan mid-game, we're able to airdrop you floor seats, and you go and you move to your new floor seats. So those are the kinds of use cases that we're very interested in, like use cases that are providing utility across the board, use cases that are bringing efficiency into things that we are already doing. We're already going to these events. We're already purchasing expensive things. We have to, have a birth certificate. All of these things are part of our journey. And obviously we can think of, impact across several different industries. Real estate, for me, is like my dream use case. Title and registration. Why should we spend all of this money in escrow insurance if we could just have title and registration live in an NFT that holds the entire history of the house in it?
So with this Milwaukee Bucks example, why can't they already sort of be doing it? What's wrong with the loyalty program, the way things are now that blockchain is better at?
It's just very limited, right? Like, why is Starbucks moving from its app from a punch card, basically, which was what the app used to do, into a Web3 infrastructure? Because you're able to provide more utility. You're able to provide better perks. You're able to let the community engage among itself as well. Because the phase 1 of Web3 is, we're here, we're setting the rules, and we're kind of like giving people some examples of what they can do with these digital receipts. We're no longer calling them NFTs, okay? And, eventually what we can do is we can let the community choose what they want to do amongst themselves, because you've now built a tool to connect like-minded individuals that have patterns of, behavior and that identify with one another.
Yeah, and I'll say that I've also spoken to a number of companies about their existing loyalty programs. And some of the real big things are, when you enter a database, the people who actually want to query that data, they often don't have great access to it. So even if they wanted to give you better rewards for being very loyal, they might not even know how loyal you've been, because it's very tough to get to that data. And then even if they could identify you as one of their top fans, most loyal people, getting you a reward is also very difficult. So to her point about doing an airdrop in a geofenced location, that's not really something that's feasible at this point in time. John, what are you guys seeing as far as NFT chatter versus cryptocurrency chatter? Is there still sort of the same amount of social interactions going on now versus how things were? Do you see a dip and now it's heading back up? What are you guys seeing in the NFT world?
So over the last year, we've seen it trend downwards until recently. It's starting to move back up a little bit, but it's not even. How it looks is, if I had to generalize it, it's the projects that are really, really good at storytelling are doing way better than those that are not. And you could look at Yuga Labs and look at the cadence of how they did what they did, and look at the cadence of the token launches and the mutants and the metaverse and all. Look at how the cadence goes. Look at Truth Labs. Look what they did with Goblin Town with a free drop, and it got up, I don't even know, 7.5 ETH or something, I don't know. But look at how one collection transcends to another, one user experience transcends to another, and look at those entities that are really, really good at that. because they're creating a foundation. They're creating a Disney-esque foundation. Who knows? My belief is that the next Disney comes out of the NFT space. It's just really, really early. And when I say really early, that's also not general. I mean, there's just not enough people with enough wallets out there. And so it's no different than coming to this conference 3 or 4 years ago when all the ICOs were here. They had all these solutions, but they didn't actually have any users because no users had wallets. NFTs have really, really helped that equation. And it's, NFTs are to thank for opening the door to dApps being successful. You actually have an audience now because people that never would have had a wallet now do because they really loved the storytelling of something. And so I think, when, hearing you talk about all the utility, man, that's so exciting, right? It's amazing. It eventually even gets to a point of, like, recognition from, and regulation. If my deed was on a blockchain for my house, what if someone hacks my MetaMask? Do I no longer own the house?
That's why we need custodials. Forget about the MetaMask. Forget about all the crypto wallets, because custodials, you can actually cryptograph a server that keeps all the keys. And you can enhance security per different use case, and you can operate on several public chains.
It requires public entities to also recognize it. Yep. And so there's a level of, like, things that are destined to happen over the next 2 to 3 years here probably as this space grows. Could not be more exciting, honestly.
Yeah, but I think even the state of California announcing that birth certificates can go on the blockchain, it's a step in that direction, right? I sit on a couple of the different blockchain committees on a state and federal level, and Governor Newsom is really interested in listening to use cases. There's senators out there, Senators Booker, Senators Gillibrand, they want to sit down with us. I've sat down with them in a group of 20 people to talk about real use cases, to talk about access to capital, to talk about putting diversity out there, because the technology does not see color. The technology does not see race, and we have a massive opportunity to increase the pool of capital through innovation. And so, what happened with the artist, to your point, is kind of like the first step. There was a statistic in the A16Z report that a average Spotify artist makes around $220 in his career, and that an average NFT artist was already up to $17,400. Like, that's a lot of money that's going to come into the economy. We are living through a neo-renaissance. And what that means in terms of, the amount of opportunity that's going to occur in different sectors is also massive.
Especially something like entertainment. And you
Totally.
take music, right? And if you're an artist that, you used to have music be your side hustle, now it can be your full-time thing, and you can make more money than you ever thought possible because you can bypass the system that's rigged against you.
100%.
Yeah.
Yeah, and it's going to be across the board. I feel like he wanted to.
No, I just want to kind of chime in. I did a webinar for higher education institutions a few months ago, and in the process of preparing that, I discovered that there is a blockchain that's called BlockCerts. Back in 2017, they started digitizing academic transcripts, and I learned about Eastern Polytechnic Institute in Ohio that actually put that on blockchain back in late 2017. So it's really a matter of time. It's a matter of critical network effects that really make it, amenable for more players. But definitely the trend there. Coming from sort of traditional finance, I also wanted to kind of point out that there is a great push to develop structured products on DeFi using NFTs, right? Because NFTs, yes, it's a real estate tokenization, it's digital art, it's video clips, TV series, merchandise, et cetera, but I mean, as late as like last year, SocGen was trying to create the first example of tokenized repo using the MakerDAO, because they would issue a bond, tokenize the bond, put the tokens into the liquidity pool, and borrow DAI. So I think there was one bank in the United States that did that more recently. So, and the guys like Maple Finance and Centrifuge, I mean, they're working actively on creating structured finance using NFTs. So I think the potential is endless. It's just the question of when there is a critical mass, and also there are some compliance issues that the community is actively working on.
And consequently, the transaction costs for all of these like off-the-shelf products, which is extremely expensive because there's a broker in the middle that makes a spread, will consequently be way lower. And that's what we're seeing already in the betting industry, right? We're seeing tokens that are held in a pool, and then once the bet goes through, it just moves over to the winner. There's no spread in between.
Absolutely, yeah.
Yeah, so we have sort of one more big topic of regulation, but that's, can be a little dry one. So if there are any questions from the audience, we'd love to, hear if there's anything a little more interesting before we jump into something like regulation. So I'll just see if anyone wants to raise their hand and ask the panel anything. Doesn't look like it, so if you come up with something, you can put your hand up. But Boris, what are you seeing on the regulatory front? Things you're hearing, things you'd like to see, either for cryptocurrencies or for NFTs or anything along those lines?
Well, it's a challenging environment, right? So overall, but I think these are challenges that are posed by the continued development of the industry. So everybody was hyped about the March 9 executive order, right, from President Biden, but then if you read through 9 reports that were created and came out recently from different agencies, it's all about, responsible adoption of digital assets, but it's all about risk, right? One of the agencies, Financial Stability Oversight Council, went as far as saying that cryptos can pose systemic risk to the U.S. financial system. At some point, perhaps, obviously not at this point. So it is a challenging environment because, A, you have less clarity in the United States compared to other jurisdictions as to who does what, right? CFTC, SEC are still fighting each other as to whether it's a commodity or not, and who polices the spot, crypto products. So that definitely does not help. But there are many substantive issues that definitely the industry has to resolve. So, for example, the recent sanction of Tornado Cash, right? Some people would say, yes, it's totally legitimate, and I sympathize with them to a large extent. On the other hand, there is a conflict between privacy and illicit finance, right? And we know that at least 30 million of, Axie Infinity and running hack were put through the Tornado Cash. So there are some legitimate questions, but I think more clarity is still needed. The agencies, especially the Securities and Exchange Commission, they continue to be fairly aggressive in prosecuting, let's say, registration violations. But on the other hand, many of the concerns that regulators have, they do have some valid reason for that. Market integrity issues are present. So market manipulation does happen. And if you look at all the DeFi hacks, they work because they are implicitly market manipulation. You manipulate the price through the constant product AMM protocol, or through other means, right? Or through the inflating of the collateral value through the flash loan and then sucking out the good tokens and leaving the bad ones. All the rack pools, they work as manipulative trading tool as well, because you're using the sort of mathematics of the liquidity pool, to inflate the price and then drain the good token and leave people with worthless token. So it is a challenging environment, but there are some legitimate issues that the industry has to deal with. And I think the industry does realize that if you look at the compliance, as I said, 2/3 of the centralized exchanges are considered to be well crypto compliant, and only 20% still have loose compliance policies. So that's definitely improvement, and the industry is responding to that challenge.
Yeah, and just to explain a little more about the Tornado Cash that he was talking about, it's a really interesting one where someone built some technology where you could sort of, move cryptocurrency in a very secretive, encrypted way. And people were using it for nefarious purposes, as you may think. There are also plenty of people using it for good purposes. And the developer of the technology was actually the one arrested when it was sort of found, some of the stuff that was going on the technology. So that's sort of a gray area where it's like, well, he just built some technology and then some people were using it in a bad way. How liable is someone who builds technology if it's being used in a certain way? So that's one that's sort of making its way through the system right now. How about you guys? Anything you've been seeing on the regular? Oh, go ahead.
Yeah, let me say something. I mean, regulators have to be, industry has to be careful, but the regulators have to be careful as well, because they can create unintended consequences that reduce the usability and the utility of the tokens. For example, Tornado Cash, yeah, they have good reasons to sanction those smart contracts, but it created the whole drive within the MakerDAO community to move away from the real-world assets. They said, we don't want to keep USDC as our collateral because it could be blacklisted. And so there are now 8 MIPs or MakerDAO improvement protocols that are, may lead to what's called the end game, whereby there are no real-world assets within the Maker protocol that reduces, the usability of the DeFi platforms for real-world cases. So there could be some negative repercussions out of good intended regulatory actions.
Totally, and I think we need to avoid a scenario like what happened with RegCF, right? Where RegCF came in as a tool for the average person to be able to go and raise equity crowdfunding, so to actually do like micro IPOs of your company to your close supporters. And it was supposed to be a fantastic tool because, it made capital more available and it made people be able to kind of like join these platforms. But for anyone that has gone through RegCF, I've gone through RegCF because I was on Meet the Drapers actually in 2018, and it was part of the program, and it was incredibly complicated, incredibly costly, time-consuming. You had to file to the SEC to raise $100,000, and so that's what we need to avoid, to happen with specifically with NFTs. It's my understanding that you're only going to be thrown under the SEC if you pass a Murphy test. So if you're generating cash with that security, but that's still extremely broad. Like, what if it's an indirect exposure? Like, we're working through cases where movies are looking to go and use NFTs to actually go and fundraise, and so we are very, very careful in what we put in terms of the utility in that token, so that it isn't constituted as future cash flow, because if not, that tool, which was supposed to be a facilitator to bring more access, becomes a complicator. You don't want a director that is raising, once again, $100,000 to have to answer to the SEC over his movie on top of everything else. So, I feel like we need to keep the conversation open with the regulators and with, the politicians that are setting the rules, but we're gonna need a new agency. We're still seeing telecom law for a lot of the resolutions in Web 2. So there's no way that we can move forward without, having a clearer set of rules.
John, anything you're seeing from a regulatory standpoint?
So I'll start by saying I do not consider myself a regulatory expert by any means. I'm a builder, I'm an engineer, I try to solve problems. And, could I see a show of hands? Who likes to KYC? None go up.
Oh, there's one over there.
Oh, okay.
He's awesome. Probably the issuer.
Amazing.
He's the regulator.
The regulator.
Of course. If you create an environment of uncertainty, and you're someone with an idea that could be the next big thing out there, and it's uncertain, you don't want to break the law, you don't want to go to jail, you don't want to do the wrong thing, you want to solve problems. If you create this environment of uncertainty, you're just stifling innovation, and those people are just going to go somewhere else. And the problem is this space is global. There's no borders. There's domestic borders, there's domestic regulations, but there's an issue with something that transcends everywhere, into outer space at some point. And how do you regulate that? A country can regulate that? It's impossible. I mean, in some sense, the system needs to innovate to a point where it's self-regulating, it's more secure, it's more safe, and I hope that the countries, make a position to protect people as much as possible along the way. But it's kind of like we're working in a space that just does not respect a border. At some point, it just goes beyond it. So the regulation kind of breaks in my mind. And again, back to the next great startup that hasn't started yet, they're just not going to start it. They're just not going to do it, and everyone loses.
All right, in the last minute, does anybody have a final word?
Word. We get asked all the time, just because we're supposedly blockchain experts, like, oh, how do I choose a project to invest in? How do I choose a layer one? And there's information out there, but I would start at, as they said so wisely at the beginning, at the community. The community is at the base of all of this. This tool is going to change the way that we organize. It's going to change the way that we, share information. It's going to change the way we're able to connect with other people. So look at the people behind every single project before giving them $1. Look at what they've done before. Look at what their experience in the Web 2 world was. And, it's very hard that you're gonna go through a rug pull.
I'll say go and network. Shake someone's hand next to you right now, and make some new friends today, because there's a lot of awesome people here today. So that's what I'll say. And oh yeah, check out LunarCrush and follow community activity.
Yes, and the JS Held also has a booth, as well as LunarCrush and Alpha IO. They're all in the community area. And thank you to Alon and Joseph for having us, and the whole Draper Goren Holm team. Thanks, guys.
Thank you.